Spotlight love. Yet I'm still blinded. The yearning for love.
What was I laughing at now? Oh yes, that crippled Irishman.
Welcome back to another video, and we're going to look at what's happened since I did my last ones on crude oil and JPMorgan. Now my YouTube channel is youtube.com/c/GaryIDS. Okay, so this will bring this up, and then if we scroll down a bit you'll see the last two videos that I did. So I did crude oil WD GAN analysis, which was 2 months ago, and JPMorgan revisited, which was 8 months ago, and we're going to have a look what's happened with hindsight. So remember, I did these videos quite a long time ago. Right, we'll start off with the oldest of the two videos I just mentioned on my YouTube channel, which was on JPMorgan. And I go into a video I did for clients back in 2018 when it looked like this, and I show you, if you watch the video, this mathematical pattern. Okay, and from that mathematical pattern there were certain levels that I said might work into the future. So like I said, I'm not going to go over it, so just go back and it'll explain the pattern. And then if we go forward, I did the video which I just mentioned around about here, and I showed you that the pattern in the gave you the top. Okay, and I also showed you it gave you this top here, which I don't think I'd oh no, it hit there once. So I showed you that it gave you the top into the future. So I did the video in 2018 and it topped out in 2021, 2022 for this top, and I showed you that it didn't work here. Okay, you can see that when it got there, now this is a weekly chart, so each line represents 5 days. So when it got there, it just went straight through. There was absolutely no weakness. Now if you're going to short something, which we will be looking to do in this case because it's rising to a level, then you know, you want to see some weakness. So anyway, it just went straight through. Now when something breaks a level, I cut the line. Okay, but otherwise what happens is you just start getting lines all over the place. Okay, and it'll just, you can see here it's going all over the place, you know, it just doesn't work anywhere. And you can just fit things in to see what you want to see, which is one of the biggest mistakes that you can do as a technical analyst. If you want to see the market go down, you have a tendency to fit lines in to make it look like what it's going to do to you. That's not what you're trying to do. So basically my chart looked like this, and then a client the other day pointed out this. So it worked at this one down here, it worked at this one here, it worked at this one here, it worked at this one here, and then it didn't work at this one, and it gave you the top here. Okay, so like I said, I didn't see it because I cut the lines. Now what I'm going to do, the one that doesn't work, I'm going to uncut the line. Okay, now let's see what happens. So the market stopped exactly at the one that it didn't work, and we've had this big shortfall from that level. Now in the video I also talked to you about how numbers divisible by 7 give you this recurring number, 7142857, 1428571428857. Now the reason that's a recurring number is that second number is 35. 35 is a division of 7. Yeah. This low here was made on 1 divided by 7, 28.5714285714. It's a recurring decimal, and I'll go into it in more depth, so go and watch that previous video. And I showed you that the fall from here was 2 divided by 7, and I showed you that the fall from this high was 3 divided by 7. Yeah, 857,14285. So you can see 42.85. To make something a percentage, you move the decimal place 2 places to the right. Okay. I showed you that from this high, yeah, it fell 3 divided by 7. I showed you from the same high, it fell 5 divided by 7 to give you the low. So when this works, it tends to work on numbers divisible by 7. Now the exception to that, which I didn't mention in the video, was this number here. Now you can see the second number, 5 divided by 21. 21 is 3 sevens. Okay, now 21 is actually its own recurring decimal, and that one you don't get that recurring number 28571428. Okay, you get another recurring decimal 809523, etc. Just go into Wikipedia and put in recurring decimals and you'll see what those numbers are. Now I didn't mention that in the video. Okay, so that's not a price there, that's just me, but make it a weak line, it's just so I know where I did the video. Okay, and let's cut that line at back. Sorry, don't want to cut it, forget that. Okay, so as I just showed you, the exact top that it just made was made on the one that didn't work. Okay, the fall from this high is 29 divided by 70. Yeah, 70 gives you that recurring number, 428571428571. Okay, so that there is 4 divided by 21, which is a 21. Yeah, 19, so it's 0. You'll have to look at it. I think it's quite a long one, the 21 one, because when you've got recurring decimal, it's always one less than the number. So there'd be 20 in the number before it recurs and goes back round again. Okay, so like I said, go and look it up. Now, from this low here, now I'm doing this from hindsight because I didn't see that. Okay, because like I said, I cut the lines. But from this low here, it rose 3 divided by 7. Now you're going to have to take my word for this, but when you actually look at the daily prices, it didn't actually quite reach that number. Okay, and so I went and checked the price, and I actually found out actually the price was very slightly wrong that I had, and when you corrected the price, it was the top. So I'm actually correcting prices by looking at what the mathematics is doing. The whole thing is a scam. Okay, it has nothing to do with how well the company does or how badly the company does. Look at the stock market at the moment. Okay, the banking system is collapsing, and what's the market doing? It's going up. Yeah, it has nothing to do with it. It's a scam. Okay, so anyway, that's JPMorgan, and then we'll now look at the second one, the last video I did, which was on crude oil. Right, let's look at the crude oil video. So this is so I did this about 2 months ago when it looked like this, and this is the actual video. So it was like I said, 2 months ago, and I had certain levels that I was watching in the future. So let's play it, or a little bit of it, should I say. If you want to watch the whole thing, like I said, go to my YouTube channel and then just watch it. Now, the next level from 37.5% and 45.45, the two dark lines for the future, gives me 66.6 or 666. Yeah, that is a major GAN number. Yeah, which is in it's 45 years in Wall Street, or how to make profits in commodities, for example. They're constant numbers. Now, I'm not trying to get that number to come out, it just comes out from what's worked in the past. Now, the number that's halfway between 45.4545, the way I do it, and 66.6 is 50. 50 is GAN's major GAN number. Now that doesn't mean I'm going to buy it at 50. Yeah, it's a place where I'm going to watch it for a possible buy. Okay, and then I'll make a decision. Yeah, but all okay. So that's what it looked like when I did the video. That was the next level that I was watching for the future, and also 66.6 from the major high. I've also put another level on here, by the way, which is a number between this one and this one, which is this one here. So let's see what happens. Now, like I said, I'm not saying it's going to get to my next level of 50%. I'm saying if it gets to 50%, it's a decision level to buy in this case, because we're falling to a percentage. If you're rising to a percentage from a low, then you'd be looking to short it, as I showed you on JPMorgan. Now, I only know it's got there when it gets there, but I'm only going to make the trade when or if it gets there. So there's no advantage in me saying when it's here, it will get to this level on such and such a date. It's pointless. If it gets there, that's the correct date. So let's see what happens. So market goes up, it comes down. Now remember, I keep saying that if you ever go down to the same level for a fourth time, you almost always go through. So 1, 2, 3. If it was to go down again and you were long of crude for whatever reason, then you really wouldn't want to be in it at this stage, because there's a strong chance that it's going to break through to the downside. You can kind of see a triple top here, 1, 2, 3, but as I've said to you before, I'm not a great lover of triple tops. Anyway, so let's see what happens. So, or in this case, a triple bottom, 1, 2, 3. Yeah. So I would personally, if this was the very first day that I'd ever looked at crude oil, I would probably be bearish, because it looks like it's going down for a fourth time. So market goes up, and then it comes down again, gets to the level, and then bang, straight through, and it reaches my next level of 50%. It doesn't stop halfway in between, it doesn't stop between or here, yeah, here or here or here. It gets to 50, and then it's get there. So I'm watching it closely, okay, and then it breaks it slightly. So this is kind of, you know, this is where you've got to be careful. Now, I always look at the past to see, did it stop in the past exactly, or did it break it by a bit? So some of these, I mean, that's a hindsight number, so it fits perfectly, because, you know, I could see what had happened. This low here, same situation. This low here worked perfectly, but this one here, it broke it slightly. This one it didn't quite touch. This one, it broke it slightly, and we've now just broken this one. Now, I'd need to see some strength at this stage, and the next day it shows some strength. Okay, and we put a stop loss below that low. Now, I don't just do it because of the percentages from that high, I also do the same thing I've shown you here from these other important tops to see where they coincide into the future. Because it's not good enough to be right, it's how long you're right for. I'm trying to make big profits when I'm right, and I'm trying to make small losses when I'm wrong. Now, I can take a small loss because I would have a stop loss below this low. But the other thing you've got to make the decision about, is it going to be a big movement is going to allow me to move my stop loss to protect my profits. So anyway, let's see what happens. Goes up, next day it goes up, comes down, goes back up again. Now, if I had made this trade, I would now move my stop loss from below this low to below this low. And if you watch the other videos I've done about going from green to red, there's like a line that I put over the top. Here it would have gone red, gone to green, up to the top, down to red on this day, and on this day it's gone back to green. So we form what's called a higher trend indicator line bottom, a higher bottom than the previous bottom. So it's this line here. It's a bit hard to see, but you can see it goes red, yeah, and then to green. So as of today, it looks like that. So if we zoom in a little bit closer, yeah, it gets to level, green, the next day it goes down to red, and the next day it goes to green. So we move our stop loss from this low to below this low. You give it a bit of leeway, yeah, you don't just do it exactly at the low. This has formed another trend indicator line bottom, so we've gone from red to green. The only difference here is that we formed an outside day, so we've got a lower bottom than the previous bottom but a higher top than the previous top. And as you've heard me say in other videos, I'm not a great lover of moving stop losses on outside days. However, just say this today, on Monday, when this is now Sunday, if the market went shooting up here, you want to protect your profit, so I would probably use that as a place to move my stop loss below that low. So just to show that I must be doing something right, and then obviously a level in the future if it was to ever get there, and also the other number if it was to ever get there. So I hope you enjoyed it.